Hello, happy Thursday, and welcome to the Hash. Let's talk about some stuff. There's a lot of red out there in the markets today. We're just going to get going. We're going to talk about this and see what is what. Will, start us off, please.
Yeah, let's talk about the Fed and Bitcoin. So it looks like the Fed's minutes from a December meeting have caused Bitcoin to crash quite a bit. There's about $800 million worth of cascading liquidations yesterday after Bitcoin broke south to about $43,000 per coin. The rest of the cryptocurrency industry also followed suit, which is pretty typical. Bitcoin kind of leads the pack in terms of price for all the coins out there. The news from the Fed was that they're looking at tapering and kind of changing how they are addressing the current macroeconomic issues out there. And it's kind of spooked the market, hawkish, as people say. If the Fed starts tapering and starts changing interest rates and putting them back up, that could mean that high-risk assets like Bitcoin and tech stocks could start tumbling a little bit because people are going to move out of those assets into longer-term assets that are maybe a little bit more stable. Naomi, I'm going to throw this over to you, though. Pretty sour note to begin the year, but it does kind of help that Bitcoin is kind of trading based off of what the Fed is doing because it's supposed to be an inflation asset.
Yeah, no, it's interesting. The notes from the minutes that were released don't look good at all. So as you said, the market is reacting to Fed notes, and the Federal Reserve, it seems, are quite spooked by inflation. And so from an organization that generally is very stoic when it comes to this issue, it's like, oh, it's transitory, and no, let's not talk about it. It's not really an issue. And now they're like, oh, let's change our whole path. Let's start tapering. Let's raise interest rates. And now the market's gone, oh, okay, that's not good, because we know how quickly inflation can get out of control. It's one thing to pretend that you have control over monetary markets, to pretend that you put like price fixes on things, but money essentially is a network effect, and it relies on other people being willing to accept that money and considering it as having the same value that you do. So once people perceive that value is diminishing, things can really escalate quickly. So what they've said is they said inflation readings had been higher and were more persistent and widespread than previously anticipated. They said it may become warranted to increase the federal funds rate sooner or at a faster pace than participants had earlier anticipated. Markets have reacted, and it's interesting to see how people are couching this, the language they're using. You had one person say, overall, I think the global markets have shown weakness in light of the recent Fed moves to raise interest rates. Hence, I do think that the drop yesterday is quite correlated. It's interesting that people are phrasing this in terms of like the markets have shown weakness. The markets, I mean, if you're considering strength being just the Federal Reserve, like injecting them with all of this printed cash, I'm not sure that's a sign of strength, which is why we should always take with a grain of salt this all-time high S&P numbers. It's like, yeah, that's what happens when the Fed just keeps printing a bunch of money. There's so much easy capital out at the moment. Banks are loaning out all kinds of capital. It's just moving around, sloshing around so much. So I don't think that's a sign of a healthy economy at all. And I think we need to differentiate between stock markets and how the underlying economy is actually doing. But Zach, I think I saw your hand go up, so I'll throw it to you.
It's interesting to me just to see Bitcoin live and die by the money printer, right? Money printer go burr was kind of the meme that propelled Bitcoin over the course of 2021 as an antidote, again, to some of this rampant money printing. And yet, at the prospect of the money printer being shut off, Bitcoin takes a major tumble. So I don't know. It's interesting to see this. One would suspect that maybe these inflation fears would cause what many see as a hedge against inflation to actually rise in value, but actually it's just behaving like any other risk asset. So it's interesting to see, again, Bitcoin sort of like rise and fall with other stuff that it may ultimately be an antidote for. But I don't know, just curious to me that the inflation narrative around Bitcoin isn't showing much strength these days, even when there's inflation concerns being voiced by the Fed. But I'll toss it back to Naomi and let her jump in, and then we'll get Jen down here.
Yeah, I think the main takeaway from this, I think it's moving exactly in line with how we would suspect. It's an on-risk asset. It is being used as an inflation hedge, but stocks, all asset classes are really used as inflation hedges. The reason why this is all tumbling right now is because the bigger takeaway here isn't, okay, this is a fear of inflation. This is like, okay, the Fed is drastically going to be changing its monetary policy. They're going to be stopping that easy capital. Now, the reason the markets go crazy when the Fed's like, we're printing money is because they're like, great, we know where that money is going to be going. It's going to be going into the stock market, into housing, it's going to be going to cryptocurrency. And so as soon as they announce, like, okay, we're going to be slowing down this money printing, we realize there's going to be a drying up of some of this fund. So people are anticipating that and pulling back there. We also realize there's going to become a credit crunch. So when businesses have less access to capital and there's growth and all this, people start to become more conservative. They start pulling money out of assets, which traditionally they were trying to, increase their profits on, trying to preserve some of their money. So they're going to be pulling it out of their most liquid assets. That's going to be cryptocurrencies, it's going to be stocks, et cetera. So it makes a lot of sense in light of that this is how the market is reacting. And it makes a lot of sense that crypto is kind of following a stock market model of how it's reacting to Fed policies. Now, whether or not Bitcoin is actually an inflation hedge, I mean, it's incredibly volatile to be an inflation hedge, and people have pushed back against it because of that. But I still think that, it's just another asset class that allows you to diversify. There's no such thing as like it's going to save you from inflation asset. There are all kinds of assets out there that some are more volatile than others. And so I think diversification is really the key if you're thinking about, hedging against inflation right now. But I'll throw it to you, Jen.
Yeah, it's always interesting and a little funny to me when there's a sea of red, all the newcomers to the space start panicking. I was on a call yesterday that was not a call with someone who I usually discuss crypto with, and he showed me his portfolio and he was like, what do I do about this, Jen? Like, oh my God, look at the markets. And I think it's always just, and I don't know why they're asking me, like I control the markets. I have no idea what they should do about that.
No?
Yeah, I don't. Yeah, I know. Surprise. And so it's just interesting to me for the people who are just getting into the space when they have to face this. It's just, another reminder that you should really understand what you're getting into and understand how the markets change. Naomi, I have a quick question for you before we move on, though. Yesterday, I saw a bunch of TikToks where I get my news, that we're pointing towards the consumer price index meeting that's coming up on January 12th. And they were comparing it to the last consumer price index meeting, which was in November. We've seen like a steady trend in Bitcoin kind of going down since that meeting. And so does that have any weight to you? Like, should we, in your opinion, expect the price to react to the consumer price index meeting on January 12th?
In a rational market, probably not. I think that the consumer price index is largely bollocks. They do all kinds of, acrobatics when it comes to calculating how much inflation there is. I mean, inflation, when it's defined by the Austrian school, is inflation of the money supply. Let's actually look at how much money printing there's been. Consumer price index tries to gauge how much does that affect rising costs throughout the economy. Now, they actually changed the metrics for how they calculated that. I think it was in the 80s after we had all that hyperinflation. Then they're like, oh, let's take out these things which kind of skew all of that upwards. According to the consumer price index, by the way they used to calculate it, we're in double-digit inflation right now. So I really don't count the CPI as a reliable method of judging things. In our society, we should be seeing, by all accounts, deflationary prices, simply because technology is getting better, and so it should be leading to things becoming cheaper to produce, cheaper to buy. That's just not what we see. So CPI is super crazy and opaque with how they calculate these things. I don't give it much credit, but the market probably, to answer your question, Jen, almost surely is going to react either way to whatever the news is. But Zach, I'll throw it to you for the next story.
Okay, the next story is about crypto crime. Chainalysis, every year they come out with an annual report on crypto crime and criminal activity. And this is a report that is really anything you want it to be. There's two equally valid and supported conclusions from this report. One is that the amount of crypto that was used for criminal purposes in 2021, the value of that at $14 billion was an all-time high. On the flip side, the percentage of criminal transactions on the blockchain, just a meager 0.15%, an all-time low. So there's a lot of ways to go with this one. It's one of those reports that is somewhat annoying in that it can be used to go in any number of directions. And that is what makes for some good conversation. So I'm going to toss this straight to Will. He's a criminal at heart. I know he really is. What's your take when you see Chainalysis hating on your criminal creed here? What are your thoughts?
This
It's
is how
sad.
rumors
It's really
start.
sad. No, this made me think of the Bored Ape Yacht Club and all the problems everyone in that community has had with securing their NFTs on chain. They keep sending their passphrases, their seed phrases, which you don't share with anybody, to scammers. People come into a Discord, they'll come into their DMs on Twitter and say like, hey, like I'm with the Bored Ape Yacht Club Help Center. If you want this feature for your NFTs, send me your passphrase. And they always send it. Like people keep sending, and all these people in this NFT community, and these NFTs, mind you, are worth hundreds of thousands of dollars. They keep sending them and they keep losing them. And then they go and complain to centralized systems like OpenSea in order to get their Bored Apes back. And I'm wondering how much Chainalysis kind of took those things into account. Obviously, crypto is huge now. So I think with the amount of transactions on chain, the volume, and just the trading across like different asset classes, I think the amount of nefarious activity was going to drop no matter what, because there's so many regular people using it now and so much liquidity in the market. So that percentage was likely going to drop. But I'm wondering how much Chainalysis can dig into some of the smaller things like an NFT hack and include that in the report. Naomi, I want to throw this up to you and get your take on it, though. Chainalysis is not super loved in the crypto community, nor any of these other kind of on-chain sleuths, but they do serve some sort of usefulness in the community. I mean, if you have a metric, you can take that before Congress and say, hey, look, we're not stealing that much, right?
Yeah, I mean, they're definitely not beloved. I also think that, are they counting when they talk about DeFi hacks? Like there are a lot of kind of white hat hackers, gray hat hackers who are probing these DeFi markets. And even, I would still call them gray hat hackers if they're running away with funds, but not running away with all of them. We saw that, Thorchain was compromised earlier last year, and the hacker responded and said, listen, I could have taken everything. You guys need to fix your code and you guys need to be doing more audits. So a lot of these people are kind of taking an auditing role when it comes to actually like taking funds, letting people know this is a fund. Some people are taking all of the funds out and say, listen, we're safeguarding them until you guys fix it, then we can bring it back. Like there's a lot of kind of gray area here. I'm wondering how much Chainalysis is factoring those things into its illicit crime, because they're like, we've had hundreds and hundreds and hundreds of millions of dollars, just in DeFi hacks alone last year. So it's just interesting to see these figures. But Jen, I'll throw it to you.
Yeah, I'll just go super quick. And Zach, I know you had a point. I'm just going to take this optimistic road here. And it was just awesome to see that legitimate use cases grew so much more than crime, despite this large number. And what I think we're going to see for the rest of the year is regulators pointing to only half of the story here. Like Zach said, when he opened up this segment, there's a lot you can take away from the report. And I think we are going to hear regulators pointing to that 14 billion number as they try to, regulate the ecosystem and not look at what else was in the report and maybe do some of their own research. So that is the sad way I'm going to end my optimistic point. But Zach, off to you.
I was going to say about the same thing. I think it's a great point, right? I mean, Capitol Hill hearings are going to be, this 14 billion number is going to be bandied about quite a bit. It's going to be interesting to see who rides with the total 14 billion number and who rides with sort of percentage of all analyzed transactions.
Mm-hmm.
It's going to be interesting to see how this gets bandied
Sherman,
about.
I'm looking at you.
Yeah, Brad Sherman.
Watch out now. All right, we're going to take a break. And when we get back, we're going to go to the world of entertainment. We are going to go and talk about Samsung entering the Metaverse and also some music stuff from Nas, who is a really good rapper. All right, stick with us. We're taking a break. We'll be back in a minute. It's The Hash.
I'm Pete Paschal, Chief of Staff for Content, and you're watching CoinDesk TV.
Welcome back, everyone, to The Hash. We're going to dive into the metaverse right now. So apparently, Samsung is getting on board and they're opening up its flagship 837 store in Decentraland. So they have a physical store. It's located in New York in Meatpacking District. Now they're moving over to the Metaland. They're basing this on Decentraland, which is an Ethereum-based virtual reality platform. And apparently the store's only going to be open for a limited time. I guess they're going to assess, like, is this useful to us? Like, trying to figure out, like, what this Decentraland thing is, what this metaverse thing is. But it's interesting that they are starting to build out stores in the metaverse. And they're not the only company to do this. There are other companies that are now like, okay, well, let's actually have a physical presence in this virtual space. So kind of cool to see this start to evolve here. We're at early stages now. But Will, I'll throw to you for some thoughts on all this.
Well, I actually have a question for everybody. Did you guys see the Walmart Metaverse video that was going around yesterday? Anybody see that?
No.
I did.
I
did.
Awesome. Well, it was pretty terrible, I thought.
What
did you think about it? What?
I mean, it was terrible, but
like
it was old. It was like from 2019 or 2017 or something like that.
That's not that old. Like when you say it was terrible, but it was old, we think like 80s, 90s.
It was old. It was old.
Archaic in crypto.
Yeah.
That's
so
just...
like, people from the 90s and 80s think that.
Yeah,
but I was accurate.
People like, oh, nice. I see your ageism, criminal Will. God. Anyway, I saw that yesterday, and it was funny that was really buzzed about yesterday. And then, because everyone was like, "Oh, everyone's building in the metaverse now because Facebook." And then someone did some reporting and was like, "Yeah, this is like really old." So I don't know. I thought that was just funny.
David
but
Morris.
someone did some reporting. I don't know. Anyway, but
get David on here, control.
Yeah, I mean, I think like everyone is going to be in the metaverse, and like Walmart and Samsung and everybody, and there's all the brands are going to be there, and it's going to be like this new capitalist hellscape. But hopefully some fun stuff will also be there too, and we'll see. Yeah.
A Samsung store in the metaverse. I just think like I think when I think about going to a Samsung store, I go to get like a TV or appliances. I don't really associate Samsung with experiences, but that's me in North America. And I wonder what Samsung is doing in terms of experiences in places like Korea. So when I lived there, Samsung was into everything. Like Koreans drive Samsung cars, Samsung make all kinds of products that we don't get here. And so I wonder if this is something that maybe the Koreans are going to enjoy a lot more because they maybe associate Samsung with these types of experiences. But I want to talk about the experiences that they are launching in this pilot. So they're going to have a connectivity theater and a sustainability forest. And the forest is going to offer a mythical experience through millions of digital trees. So I don't know, Naomi, if you have more information on this. It sounds like there's going to be some kind of gaming component. I just don't see how it relates back to the Samsung brand, but maybe people are going to be interested.
Yeah, maybe like on the customization stage, apparently there will be like a mixed reality live dance party hosted by DJ Gamma Vibes from the physical Samsung 837 store. It's interesting. They have a lot of these kind of hybrid things going on because they've also, while they've got this forest, they're also planting trees in the real world, but in partnership with the blockchain company. So it's like, it gets really kind of meta, mind the pun there, and like recursive. So apparently Veritree, which is a platform, it's Cardano-based climate restoration platform. And they operate the Cardano forest where users can donate 15 or more Cardano tokens to receive limited edition tree tokens. And then Veritree then plants a tree on behalf of users for each ADA exchanged. And it's just kind of like this weird intermingling. Like we're going to see more and more of this. It's not just like metaverse stuff. It's augmented reality stuff. It's like blockchain worlds coinciding with real world worlds. And it's like, it's kind of really interesting seeing these lines start to get really blurred there. But Zach, I'll throw it over to you for some final thoughts on all of this.
I went into the metaverse on New Year's Eve because there was a metaverse New Year's Eve party in Decentraland. I didn't see Paris Hilton. I couldn't really navigate that well. I went and there was like,
which metaverse did you go to?
It was Decentraland. It was the Decentraland Times Square thing. And it was a little bit janky, I have to say, but it was interesting too. It was like I sort of ended up in a Metaverse quiz night, and it was interesting.
What?
It was interesting.
Please tell us more. Did you participate?
It was interesting. Yeah.
Did you win?
Did. It was like one of those. I did not win. I was terrible. I got smoked. But yeah, it's early days. It is early days for the metaverse, and I think it's going to be interesting to see if like real stuff happens in the metaverse and people start using it for real in a way that is appealing to them. Anyway, I don't know.
Probably
That's
not.
all I got. You never know, Will.
Right.
Stranger things have happened. Who knows?
It's true.
True.
It's true. All right, let's move on from the metaverse. Okay, so do you guys remember Royal, the platform that will allow artists to sell tokenized royalties to their fans? Tech investor and rapper Nas invested in the platform, which was founded by Bilal. He is now selling 2 songs on the platform. So he's selling Ultra Black and Rare as these limited digital assets. So before we get into it, I'm going to give you guys a quick recap on how this platform works. So essentially, Royal allows any artist to sell tokenized royalties of their songs so that fans can earn royalties on those songs. And then possibly later, the artist can buy those royalties back, allowing them to have more ownership and control over their music. Zach, I'm passing this right off to you. Nas has been kind of like a prolific investor behind the scenes in the crypto space. I know you did some reporting on it. Now he is selling 2 of his songs as limited digital assets on Royal. What do you make of this? Is this just going to kind of flatten the music industry as we know it?
I don't really get it, but isn't it crazy that Nas had a song called Ether like in the 90s, and ether became a verb for like completely annihilating someone with a battle rap? I think that's pretty cool, and it's under discussed that Nas was on Ether before Ether existed by like 15 years. So first of all, I'm putting that out there. Way to go, Nas. Second of all, I don't really know how this Royal thing works, but it sounds kind of cool. Like, it's not like some of these music NFT projects that we're seeing where, you have NFTs of songs, and then, those are sort of freely transferable on various NFT marketplaces. This is like some other level of, I guess, like boosting fandom in a capacity of like tokens and sort of like, I don't know, building brand advocates by way of the crypto coins. So I'm curious to see like how it all works out, and if this is something that is tradable, and like if people find ways to make this work the way other crypto stuff works. But I'm going to check it out. I think the drop is on next Tuesday. I'm going to check it out. I'm going to see what happens. And we'll go from there. But it is cool that Nas, who's an investor in this project, put his hand up and he said, "Hey, I want to be the first person to launch some songs on this thing," putting his money where his mouth is. So, pretty good get for Royal to have Nas on the cap table, and for him to be the debut drop for them. So yeah, interesting to see how this pans out. A lot of Web3 music stuff is happening lately, so it's just gonna be a question of seeing what sticks. Over to you, Jen.
Yeah, I guess it's just another way to get the money you need to release the songs without being, tied to the record label and getting fronted the money. And so it's an interesting thing for artists. I know Nas is able to do this because he completely owns the masters on those 2 songs. So for artists who don't own their masters, which there are many of them who are tied to their record labels, it will be much harder for them to participate in something like this. So it will be interesting to see what happens on that level. But I also think like these limited digital assets sound very securities-like. And I just wonder what's going to happen with the regulators. But Naomi, I'm sure you have more to say on that.
I mean, that's exactly my question, because we've talked in the past about how they've looked into this. Their lawyers say no, because music is like this other beast. They're not quite considered securities. But I mean, securities are financial contracts, right? They're kind of shares or bonds. This seems like a share situation. People are literally getting like dividends. They're getting royalties. They grant an owner a stake in an asset. Like, I mean, the two key features of securities is that they give the certain rights to the owners. And they also could be traded in financial markets. I mean, this seems to be exactly what these royalties are. That being said, it should absolutely not be so heavily regulated. People should be able to sell fractional ownership of anything that they create. I think it's crazy that the Securities Exchange Commission has come in and said, like, no, we're going to take all these opportunities for raising capital for your business away from you. And it means that only kind of, you know, the big players who have all of the capital to get them over that barrier to entry are able to participate. So once again, financial tools that are only accessible to the wealthy. It's not a really great system that we're setting up here. It's definitely not equitable. And one of the key foundational roles of the SEC is to create an equitable playing field, which they're clearly not doing by targeting all of this fractional ownership stuff. So I really hope that more people start experimenting with this stuff and they start fighting the SEC. You know, you've got XRP community fighting the SEC right now. You've got Library fighting the SEC right now. I hope people start realizing all of the opportunities that are being taken away from them because of archaic policies from the SEC and start really going hard and battling them. Because it's crazy that artists can't do this. And it does seem like it's very great area that they're going to have to navigate. But on that note, Zach, I'm going to throw it back to you for a wrap.
All right. We're going to see if Nas can ether the SEC one day. That would be crazy.
Ooh,
what if that
nice.
was the hot case? If it was like Nas? What do you think?
Yeah.
Anyway.
Gary Gensler versus
All right.
the rap battle.
Oh,
Yeah,
that'd be
we
so
could wrap
cool.
it out. I could wrap it out. That'd be sweet.
Golden Gary.
All right. This was the hash for Thursday.
Okay.
I'm Zach Seward. We got
Sorry.
Will Foxley. We got Jen Sanasi. We got Naomi Brockwell. We had a great half hour with you today. And we'll be back again to do it tomorrow for the Friday show. And there's also more CoinDesk TV for you at 3 p.m. Eastern. Go tune in and read all the stories on the site between
All
now
of
and then.
them.
Everyone.
Yeah, that's your,
Every
that's
single
your
one.
challenge.
Stories,
That's your
guys.
challenge
That's
today.
your
Homework before
There's
tomorrow.
a lot of them.
Gonna
There's a
do your
lot of
test.
them. We do about 30, 40 a day. You're going to have a lot of reading to get through. So enjoy.
We'll do
enjoy.
Decentraland
Our gift
quiz.
to you. Have a great Thursday. We'll see you soon.